Hi, I'm Alec Osland. I'm an attorney at the Yanowitz law firm, where we've been assisting families for over 30 years in wills, trusts, and probate. The gift exemption for 2026 is staying at $19,000. So, what does this mean? It means that in 2026, you're able to give an individual $19,000, not including a spouse or a charity, and you do not have to tell the IRS about that gift. So essentially, you can write a check to anyone you want, and it can be for $19,000, and you don't have to tell anyone about it. Now, I get the question of, oh, does that only mean I can give away $19,000 total? And the answer is no. You can give $19,000 in gifts to one individual, but you can also give $19,000 in gifts to as many individuals as you want. Essentially, as long as you are not making a gift over $19,000 to any individual, you do not have to tell the IRS about it. Now, if you do make a gift over $19,000, it's not a big deal. You have to file a gift tax return, which is IRS Form 709. For married couples, you can actually pass 2 times the exemption to an intended beneficiary. For example, if one spouse gives a child $19,000, the other spouse can also give that same child $19,000. It is important that you are careful on the way that you are gifting these assets, though. If you're writing a check from a joint account, we want to make sure that both spouses sign that check if that check is for more than $19,000. If the money comes from an individual account, we want to make sure that the maximum amount is only $19,000 coming from that individual account. This allows you to pass, again, $38,000 from a married couple to a single beneficiary. Now, if that child or beneficiary is married, you can also give that spouse $38,000 in the same way. This allows a married couple to gift to another married couple up to $76,000 in the calendar year of 2026, and we don't have to tell the IRS about the gift. Currently, for 2026, the federal exemption is $15 million. And so that comes into play when we start thinking about, hey, we have to file a gift tax return. And how it works is, say for example, that you made a gift to Bob, and you gave Bob a check for $1,019,000. Well, that's $1 million over the exemption. Well, we file a gift tax return telling the IRS about that gift, and since it's $1 million over the exemption, we're essentially utilizing $1 million of our exemption for when we pass away. What does that exactly mean? That means that when we die, instead of having our federal exemption be at $15 million, since we used $1 million of it during our lifetime, our federal exemption is now $14 million. And the federal government, they never forget the gifts that you make during your lifetime. They have a memory like an elephant. So even if you made a gift over a certain exemption amount 20 or 30 years ago, they're still going to look at that gift that you made, and they look at that in factoring whether you owe an estate tax. Again, the federal estate tax for 2026 is $15 million. For married couples, we're looking at $30 million. So this really doesn't impact a lot of people. Minnesota is a little different than the federal estate tax. Minnesota has an estate tax of $3 million. So if you're over that $3 million, you would have to owe estate tax upon your death. Similar to the federal government, they're going to look at the gifts that you make, and they may decrease your exemption upon your death. Whereas the federal government remembers all gifts that you make during your lifetime, Minnesota only has a 3-year look-back period. If you make that same $1 million and $19,000 gift, but you've survived that gift by at least 3 years, Minnesota is going to have no recollection of that gift being in your state when you pass away. But it is very important that you know and that we look at what the current legislation is when you are making large gifts. We may want to think about, hey, what is your current net worth? Does it make sense to start gifting assets? And you may have the question of, well, why does someone want to gift? Why wouldn't we want to go ahead and gift assets? And there's a number of different things that we have to consider. We may look at basis, we may look at financial stability. There's a lot of different factors that are at play. So when we are specifically worried about taxes in Minnesota, we may want to start gifting large amounts of assets sooner rather than later, just to minimize our Minnesota estate tax liability. With that, There's a lot of other factors to consider, which is why it's important that you work with an attorney who can help you and advise you on this. And so if you're interested in finding out more about gifting or Minnesota estate planning, make sure you subscribe to our YouTube channel to find out when we post a new video. Thanks. Have a great day. Bye.